Let's get right to the floor show. Joining me now with $4 billion in assets under management, Palisade Capital Management Senior Partner and CIO Dan Veru. Dan, this fire hose of news that is shooting at us. I mean, just the last 45, 47 minutes, we're getting the Taiwan trade deal. Interestingly, the market is slightly off the highs of the session. It's not exactly juicing it, but what for you, as a guy who is looking at many, many stocks and the portfolios of many investors, are you thinking right now about the markets?
Let's start with valuation. So the Mag 7 stocks traded 31 times earnings. The S&P is at 23 times earnings. If you equal weight the S&P 500, meaning that you take the biggest contributors to the S&P 500, like NVIDIA being almost 8% of the index, and then assume that it's an equal weighted along with all the other Mag 7s, you get to about 18 times earnings when you look at the market that way. And then you have small caps and mid cap stocks. Those are trading at 15 times earnings. So we're going to see this year a real broadening out of the economy because of tax legislation, better regulation, and lower interest rates. All those are going to be accelerators for a broader earnings picture that actually is going to show an acceleration of earnings for small mid-cap stocks that's greater than the large cap stocks.
We've been scrutinizing the Russell 2000, certainly over the past couple of months, but absolutely over the past 5 days. We are on pace for the 5th record for the Russell 2000. But, you know, true to its name, it's got 2,000 stocks in there. Do you just act like a, you know, as my friend in the South said, you know, you don't be a blind dog in a meat house, right. You know, eating anything that comes out, the tongue, I know that's gross, the tongue and the hoofs. But what do you look for in the Russell?
It's so important to own profitability. The Russell 2000 has had the second longest period of underperformance relative to the S&P since 1931. We had a clearance event in April where everything went down. The first phase of that recovery was low-quality, loss-making companies. We're now in the second phase where you have to pay much more attention to valuations.
I'm looking at the Vanguard Russell 2000 Value ETF, ticker symbol VTWV. This, you know, basically brings out the names that are value.
Yes.
Is this what you're talking about? And those names would be EchoStar. I mean, EchoStar's had an incredible year-over-year performance. Hecla Mining, Cadence Bank, Commercial Metals, a bunch of these other names, Jackson Financial.
Yeah, banks are really attractive. Commercial Metals, you mentioned, a materials company. Those are the kinds of companies you want to own. And let's talk for a second about the small, mid-cap regional banks. They're trading at a discount to the large-cap banks. Historically, they've traded at a premium. You have much better regulatory environment. We're likely going to see more M&A consolidation among the banks. And I think that that's an area that is extremely ripe for a lot of activity.
Right, but would you glean out some of the semiconductor names? I mean, you look at what they're doing today, and everybody keeps saying, depending on the day, oh, the tech trade is over. Not us. I mean, you're looking at somebody who just came back from CES, and every single thing, whether it is Caterpillar tractors or, you know, lawnmowers, has semis in them now.
We were around in 2000. The quality of the companies at the tech bubble back then, when it really was a bubble, was extremely low quality. You can't compare the companies from then to today. First of all, most of them are gone. But today's companies are big free cash flow generators with enormous balance sheets and the ability to really ride through and make these enormous capital investments that's going to be required for AI.
Let me ask you a macro picture. The economy looks good. We got first-time jobless claims today.
Yeah.
This is the number you want to see go lower, much lower than expected. This is a good sign. It means fewer people joining the unemployment rolls for the first time. The 2-year, 10-year, those yields are moving higher. The 2-year yield at a 5-week high. How do you feel about bonds at this point?
I think you have to be a little careful because, you know, bonds don't do well. And I think inflation's coming down, but you have to say to yourself, are the next 10 years going to be just like the previous 10 years where we had zero interest rates and zero inflation? We're going to have a higher level of inflation and a higher level of interest rates for good reasons. We're making real capital investments in the country, and that costs real money.
10-year yield of 4.165, up 3+ basis points at the moment. Great to see you, Dan, very much. Dan Veru.